Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis. If you're new, welcome. If you're a returning subscriber, thank you for returning. This is quite a long video. It's going to be quite a long video, so we've got it time stamped as well down in the description box below, so you can skip to your favorite pairs, or you can watch the full video and learn something about supply and demand, right? So we're going to get straight into the technicals. We're going to start off on the US dollar index, right? Dow Jones dollar index, and let's go to daily, right? So what we've had last week, prices came down. If you watched last week's analysis, into this level, put in this kind of like doji type candle, and then we pretty much went up to the upside. And why we use the dollar index is a measure of the dollar strength against a basket of currencies, right? So what we do is we look for, you can look for extra confluence demand zones on the dollar index and dollar strength, right? And then you look to trade dollar pairs if they are also at demand or potentially supply areas, right? So we did have this last week, and for those of you who managed to buy into some US dollar strength, well done on some other currency pairs like the yen, dollar Swiss, dollar CAD, etc., right? Not necessarily dollar yen, didn't have necessarily everything lined up, but there were a few other pairs that were lined up with some supply and demand levels, right? So again, well done to you guys. And now we're pretty much into this ranging, this market on the daily, right? But if you look at the weekly, right, we've pretty much been going sideways, but we've put in this reversal candle, pin bar, another pin bar. It just won't continue going down. And I'm a fundamental trader, right? And what you always have to ask yourself is why the price movement, right? Why these bearish candles that have trying to indicate it's going to go to the downside? What's the likelihood of it going down to the downside based on value and fundamentals, right? So again, this is technical analysis, but just it's a great idea to keep your eye on the technicals, right? The dollar Federal Reserve are looking to raise interest rates, and they've had some good inflation this week, right? So the likelihood of them raising interest rates, is kind of stopping, prices really kind of selling off. So pin bars aren't the reasons why, price moves. It's just a reflection of what buyers and sellers are doing, right? And give us an indication, but it's really the fundamentals behind price movement, and we coincide these with supply and demand levels, which are previous areas of value, right? So at the moment we're not necessarily on the prices are pretty much going straight, but we've put in some bearish candles both on the daily time frame and obviously the weekly from last week. This week wasn't so bearish, right? So if you are looking to get short dollar, what you're looking for probably now is just confirming price action on something like the yen or the Swiss or the CAD, right, or any of the dollar pairs, and we'll get into that in a sec. And if you're looking for another buy opportunity on the dollar, right, then this is going to be your first area, and then this will be your second area right here. All right, just keep in mind that the more a demand zone is touched, is the weaker it becomes, right? So if you're looking to buy around here, then just keep in mind that potentially we've touched it twice, but at the same time fundamentals at the moment and sentiment are on our side when it comes to the dollar. We don't know how prices are going to react with this trade war that's going on, right, and how it's really going to affect the dollar. But just keep an eye obviously on the trade wars and obviously what is going on. But let's go to the US dollar Japanese yen, right? So you guys may have seen, right, if you're new, you're seeing this for the first time, if you're returning, you understand exactly what we do, right, to enter trades, just basically the 5, you know, fundamental things that I look to do when entering a trade. This isn't everything I look for, but just to help you guys out, if you're looking for entries and levels, really, we want to try and determine the strongest area, the most likelihood of turning points on a price chart. So what we have to do first is determine value using supply and demand zones and value ranges, and then we determine the supply and demand equation, which is basically where the most traders, you know, are going to be buying and selling, where the most volume potentially could be. And we use horizontal, diagonal, and dynamic support and resistance, right? So if we're going to go through that process right now, what we do is look at what happened last week, where we had pretty much, you know, once, twice, 3 times this supply zone, right? It held, well, it didn't hold last week, kind of got a breakthrough, right? So we can pretty much delete this, and then we have some hidden demand zone. We also got some demand zone right there, right? So we know that basically demand zones are where previous areas of you know, value as far as a bargain or an expensive area. And now what we're looking to do is we're looking to understand where we are in a value range. And the reason why we use value ranges is because prices are usually within some sort of range. We never know which one it's going to be, but we decide through value ranges where we should be buying and selling. Now, if we're looking to buy the dollar, then we're looking to probably buy at the first area around here, which also coincides with a value range, right? We don't know which one, right? We look at it, coincides with the fair value level, 50% level, right, between an expensive area and a cheap area. So we've got some confluence here with fair value traders looking for pullbacks, going to be buying here. We're looking at the first area to buy at a cheap and a bargain area. So this is really the first area to look to try and get long, right? And then on top of that, we try to look for where other traders are going to be buying and selling. So, you know, first of all, we look for horizontal support and resistance. We pretty much get it right here, right? Horizontal support and resistance, and all support and resistance levels are supply and demand zones that have been projected into the future. So we've got some support, what traders would call support there, resistance, and then if we drag that across, you can see that there'll be support and resistance traders looking to, you know, buy here. If they were looking to buy the dollar on a pullback, this is an expensive area at the moment, right? So here would be the first cheap area, the first bargain area that we'd be looking to buy, right? Then we look for any diagonal, all right, support and resistance. So we're looking for, you know, something like trend lines, right, in this area. So here we go, right? We've got nice area building here. We've got horizontal support and resistance, diagonal support and resistance coming within this area here, right? And then we've got dynamic, and dynamic is where we use the moving averages, right? The major ones are the 2150, 100 and 200 SMA and EMAs, right? The traders use to trade and use them as support and resistance, right? So if we can get any of these to line up within this area here, at the moment 100 and 200, I doubt it really would, it's more further down. So what we go is to the 21 and 50, right? And you can see how the 21 and the 50 EMAs and SMAs are coming up to this area. So if we do get a pullback within this area, this is where you'd be looking to you know, buy the dollar if you were a buyer, right? And you would do the same thing if you were looking to sell the dollar, right? Just go through the exact same process, right? You can do it on pretty much all the currency pairs, and you don't necessarily have to have everything lining up. It's just where traders are looking to buy and sell. What you must have though is support, supply and demand zones within, you know, the area, which I give these levels out for free if you sign up. Link is in the description box below, right? But also keep in mind that the yen is a risk currency, and if risk sentiment does return back to the market does care about these trade wars. It has been kind of shrugging off the trade wars this week, right? You could see prices actually break through this level depending on, you know, the risk sentiment, right? But from a technical perspective, you know, this area looks like an excellent area to get long, right? So again, if we were looking at, let's go back to, let's get rid of some of this stuff. No. Right. And then what you would do is do the same thing to go short, right? I'm not going to necessarily go through all the shorting opportunities, but the nearest one pretty much is going to be, at the moment, is going to be at this this level right here on the dollar yen, the 113, just above the 113 level. And if we're looking at the weekly, yeah, right, so it's pretty much coming to the up into this weekly, the lower end, right? So potentially you could want to look for a shorting opportunity right here, but I'd probably maybe look for more of a round number. If you can come up here, if I was looking to get short, that is, this isn't financial advice, but if I was, then that would coincide with, you know, the higher level of this weekly supply zone, right? So yeah, so that's where you'd probably be looking to potentially get short. This is, you know, this is, even though it's the weekly time frame, I probably prefer it to come up to more of a round number and look for some trade opportunities there if I was looking to get short. So dollar Swiss. So we've come up, basically broke past this supply zone, created a new high. And if you want to know exactly why we plot the demand zones in the areas that we do, there is an introduction to supply and demand zones, basically breaking down the psychology behind you know, supply and demand zones, right? And that should help a lot if you're not necessarily too clear on understanding what's going on in this video, right? And really the reasons why you know, we do trade supply and demand zones, right? So got a bit of demand zone here, prices broke to new highs. Now we come up into this this high here. So if you want to be a shorter, right, trying to sell the dollar, if you think it's expensive around here, it's putting this, you know, pin bar candle here. This is probably just profit taking, to be fair, but yeah, I would say understand really what causes the pin bars, right? Pin bars can just literally be profit taking, right? It's the end of the week, it was Friday, and doesn't mean it's a reversal of sorts, right? So I've got a video on that as well in the description boxes. I think it's called is the pin bar candlestick a reversal signal or just profit taking, right? So that would be, you know, if you do want to get short, risk is coming into the market again, right? Risk off environment, then this could be a decent short. If you're looking to get long, this would be the area here. Now you might see these areas and think to yourself, well, which demand should I be taking, right? Then what you would do is look for some horizontal support and resistance within these demand zones to look to try and see where other traders would be trading. So the one that pops out to me immediately is going to be this one here, this area here. And you've also got not so clear on the daily, all right? So on the daily, this is what we'll be looking for, and then what you do is go down into an intraday time frame, right, and potentially look for intraday support and resistance zones within these daily supply and demand zones. So again, the one that kind of sticks out to me that I can see immediately is going to be around here, right? So this kind of coincides again with this 0.99 round number here, right? So we got resistance, some support, resistance, again some resistance, some support, again broke through. So around here would be where I'd be looking to get long within this larger demand zone, right? If I'm looking to be a buyer of the dollar, right? So let's go back to the daily. So again, we have our immediate trade starting at the week, and then you've got levels further up. If we're looking at the weekly, we're looking at, yeah, again, we've got quite a few supply zones. So again, just look for any support and resistance zones, and again, some confluences with trying to find the supply and demand equation, right? Horizontal support and resistance, round numbers as well, diagonal support and resistance, and then dynamic as well, right? Moving on to the dollar CAD. Dollar CAD last week did make lower highs, lower lows right here, came up into this area, and then we've kind of sold off. The CAD raised, say the CAD, but the Bank of Canada raised interest rates this week, or say last week. So what tends to happen is when you have two central banks like the Federal Reserve and the Canadian dollar raising interest rates, it's strength versus strength, right? So when you have strength versus strength, the market state will tend to chop, right? So, and I say chop, move sideways, right? Because buyers and sellers are in agreement, right, of the value between the Canadian dollar and the US dollar, or just basically currencies in general. So, you know, buyers will say, okay, well, it's cheap down here, but it won't really necessarily want to go too far. It's when you have strength versus weakness is where you have trending markets, right? So at the moment, your selling opportunities right now to the downside is a bit limited, because you kind of have this demand zone here, and what we have done, we've technically put in a higher high, because if this lower highs and lower lows, right, pullback, we've made one here, little swing, and then we've made one there, we've basically broken past this. So on a micro level, this would be considered hidden demand, right? It's not necessarily a range that I like if I'm looking to buy. It's quite a tight range, to be fair, to maybe about, actually, matter of fact, how many pips is that? Yeah, well, I like a range of around about 200 pips, to be fair. 150 is, you know, a bit on the tight side, but if you're going down into the lower time frames, like the 1 hour, 30 minutes, this is more than enough for you to potentially make some pips. And the reason why I like 200 pips as a bit of a minimum is because I trade on the 4 hour you know, time frame charts, and usually my risk is somewhere within, depending on the currency pair, could be somewhere between 60, 70 pips, 80 pips, 90 pips. So if I got a 200 pip range and I'm trading from one side to the other, then I know I have at least a minimum of a 2 to 1, you know, 2.5, 3 to 1 as an absolute minimum. So I like to see ranges, you know, that at least 200 pips. But, you know, so if we were adding the value range tool, right, from the low to the high, you know, if I was looking to be a buyer, this would be the cheap area, this would be the expensive area. And if I'm looking to, you know, buy down here, and my pip risk is, say, you know, 70, 80 pips, I need to have at least, you know, like I said, 140, 150, 160 pips to the upside for me to, you know, for this to be kind of worth it, right? So, but again, if you're looking to trade lower time frames hourly, and you're looking down here half an hourly, and your pip risk is maybe 20, 30 pips, you know, if you've got 150 pips to the upside potentially, then, you know, that's a good risk reward, right? So from a selling perspective, this is where you are. From buying perspective, this is where you're looking to probably buy the dollar. You've got some confluence in there as well, right? If you look to the left, you've got, you know, you know, resistance, 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 resistance. Price broke up. Now should turn to support. And again, I'm not going to go through. Actually, I might as well. Let's do some parallel channels. Let's see if this lines up. Should do. Right. So you got parallel channel here as well. Right. So this area here is where you're going to have potentially a lot of traders. Right. Hundreds. Let's look at the 21 and 50, right? So you got the 20, you got the 50 moving average around here as well. So anywhere around here potentially, if you're looking to get long on the dollar, would be your first best area, and then you just be looking for prices to go to the upside, right? Moving on to the New Zealand dollar, US dollar, right? Let's get rid of this. So last week I was looking for this trade just to come up just a bit more into, you know, this supply zone. Unfortunately, did not get it, right? There was this support resistance area here. I was really looking for prices to just kind of break through that and then come down, but we were at the half level and prices reacted. But no matter, I just have to wait for prices to come back up here to look to get short, right? But if you're looking to, you know, get long, actually, matter of fact, if you're looking to get short, yeah, you'd have to probably look for, yeah, this is obviously a first area. Looking to get long, prices do come back, and you can see that prices did come back into this long-term demand zone here from way back in 2016, right? And we did get a move up. And now potentially we could be looking for prices moving higher, right? But if I was looking for this, I'd probably wait for the, if it does get down there, if prices come down into this again 67 round number before looking for a long. This would be where probably the you know, the major structure would be around here. But again, we could see obviously demand here and prices move higher, right? So those are your options for now. Moving on to the pound dollar. Last week we had this supply zone which we came up into. Prices really spiked through. If you're looking at it from, you know, this area, this level here, prices spiked through, then put in this massive bearish candle. And matter of fact, this illustrates quite well why I look for a few hundred pips as well, right? Because if this was the range, right, this is the range here, right? You know, prices put in a high, price started putting lower highs and lower lows. But I know from this low to this high, once price started to get rejected on the lower time frame, yeah, you know, it put in this bearish candle in the 4 hour, right? So if I'm looking to, you know, basically, I'd have to have at least 170, 180 pips to the upside, right? But look where I'm trading. I'm trading around. I'm buying at pretty much fair value, and even though I've got 150, 160 pips to the downside, I'm not really a fan of one-to-one, risk reward trades, right? So it doesn't mean I won't take them, but I prefer if I've got, you know, my risk. Let's say, for example, this candle was, you know, somewhere around, you know, here, put in a reversal candle, then I know I've got at least, you know, 70, 80 pips to the, you know, my risk, and then I've got at least 2, 3 to 1s to the downside from trading it to the downside, right? So for me to trade this massive bearish candle, I would need at least a good 3, 4, 500 pips to make this you know, worth my while, right? But going back to the daily, we did come back into this demand zone here. Let's get rid of this demand zone here, right? We come down into this lower demand zone, obviously put in a nice bullish pin bar, right? And that was a demand zone from way back here. So at the moment, prices are contained within this range, and it's quite, like I said, it's about a few hundred pips, but it just wasn't enough. Oh, sorry, what am I doing? This one here, right? Between and it was about 200, 300 pips, but it's just the risk wasn't, it was a bit too much for me, to the, it wasn't enough for me to the downside, right? But if you did manage to get in on an even lower time frame, well done to you. If we're looking to trade this now, I would probably be looking at dragging that up to here. Around here would be where the supply zone is. If we made lower highs, lower lows, right? Technically, matter of fact, let's see if that one is, yeah, right. Put it here, and then look into, again, try and get short here on an intraday time frame. If prices do come back down to here, it's a demand zone. This is where you'd be looking for. If prices break past here, I think this is really, I like this 1.34 area as well, to try look to establish, you know, some more shorts if you see the right kind of price action. If you're looking to buy the dollar over the pound has got some Brexit issues, so you know, but they are saying that they're looking to raise interest rates. Bit of a weird one. I don't really believe them if they do, but they could do. But Brexit is really overhanging the UK economy at the moment, so don't know whether it'd be a wise move for the Bank of England to raise interest rates before, you know, before Brexit negotiations are concluded. But anyway, moving on to the pound yen. Again, the markets have literally just shrugged off risk sentiment, so we get rid of that. We have some hidden demand right here. Hidden demand, and we're coming up right into this, right into the lower end of this supply zone. So if you do see some price action, if you did kind of thing on a lower time frame, that would have looked a bit bearish. Right, so you can see it here, kind of just reacted on the underside and started selling off. Prices are moving a bit higher, so again, probably may look for something to come right into this supply zone before looking to establish any kind of short. This is going to be a first long area, second long area here, and again, don't forget to, you know, apply determining value and your supply and demand order equations, right? And again, this is just you know, a foundation of how I trade, right? There's a lot more that goes into supply and demand trading. It's not just simply these steps here, right? So if you want to know a bit more as well, there's a course as well on the Trading 180 website, which is in the link in the description box below. Moving on to the pound Swiss. Pound Swiss, we're up right up into this supply zone here. Again, we've reacted. You can look on the lower time frame. So if you come up into, and this would have been, you know, a level where traders would have been looking at, you know, obviously getting short here, you know, support, sorry, resistance, and got some resistance here, right? So there would have been a bit of a sell-off on a, you know, lower time frame, and then we have, you know, prices obviously come down and shot straight back up, but there was some pips that could have been obtained in that level. This was a decent level to try and get short. Looking back on the daily time frame, I'm gonna move this to here, and we've also got and had a demand zone right there. So I think these are really your areas to try to look to get long or short. If this does break through, then really your next level to try and get short is around here, and your next area to try and capture, you know, buy the pound is going to be right here. So if we do get prices come back down again, we did it this week, but if we do get another retest, that would be the first area, right, to try to look to get long euro dollar. And we have, you know, this week or last week, prices did come up into this supply zone. It didn't come quite up into the level that I really wanted it to. I wanted to kind of hit that 1.18 level on the lower time frame, because on the lower time frame, this is where I was kind of identifying, you know, support and resistance, this area here, ready to come up into this, you know, just past this 1.8, bit higher, right? And then I would have definitely looked to establish some shorts. It just came short on this level. But no matter if prices do come back up here again, I'll be looking to get short. And again, this is just me, right? And again, it depends on obviously fundamentals and sentiment. But if we're looking at from a daily point of view, this was demand, your first demand zone. So traders right now who would have got in here, you know, it's putting a nice pin bar. So we could see move to the upside, right? And remember as well, keep in mind that we are on the dollar index. Yeah, we're at this supply zone as well, so this could coincide short with a euro dollar long if we do see some profit taking and maybe potential weakness on the dollar, right? Again, it's not a recommendation to buy or sell. This is just you know, looking at the technicals and seeing where some trade opportunities potentially are. So shorts, looking at anywhere within here, preferably to the upper level of this supply zone, and long trades, I think right now, potentially, depending on how much you want to risk, you may want to wait for prices to potentially come back down into this zone, put in maybe some sort of double bottom trade, and then look to trade to the upside. So moving on to the euro yen. Euro yen, right, from last week. So I did have this this one from last week. I was looking to establish some short trades, right? Some short trades here from last week's analysis, but price just literally, you know, blew through it, which is never a problem. You know, I'm not married to an idea. Again, risk sentiment, even though we're in a risk-off environment with the trade wars, for some reason the market just hasn't really reacted to it in the way that you know, is typical, right? Doesn't mean that fundamental sentiment don't work. It just means that you have to be a bit more patient, and if things do start to kick off, then right now, you know, into the following week, you know, China could literally come out and just say, well, we're going to be doing this tit for tat thing. If Donald Trump wants a trade war, then I'm going to give him a trade war and give the US trade war, and then the market could react. Japanese yen gets stronger in a risk-off sentiment, and then this could be looking at a short trade, or the market could just say, yeah, we don't really, you know, we're not really bothered by this trade war at the moment. You know, there's nothing too drastic, you know, going on with global growth and things like that, or potentially, and we could see prices, you know, move to the upside. So if you are a shorter, this would be a decent area on the lower time frame to look to potentially get short. Let's see, for example, yeah, you might see maybe some sort of double top, divergence, whatever your entry is, you know, around here, right? If you're looking to get long, you've actually got some hidden demand, which is right under this supply zone, so it's quite a tight range, to be fair. So you'd be looking to get long, right here. Yeah, in this, anywhere within this area is 130 round number here. But if you're looking to get short now, it'd probably be a shorting opportunity on the lower time frame charts, right? And again, use, you know, some horizontal, diagonal, and also potentially some dynamic support and resistance as potential confluence, right? So let's go to the euro pound. Euro pound has reacted to this supply zone here. The overall range is from here to here, that I can see on the daily time frame chart. Sorry, I'm doing VR tool. So actually coming up into, and this potentially is also a value range as well. So we don't never know which one is the value range, but we mark them out just to obviously see where we are potentially, right? So this could be the start of a range where prices are contained between here and here, right? Between that high and that low. So if we've got, if you know, you're taking a short trade, we could see, you know, prices continue falling. If not, if prices do break up to the upside, this would be your next range to look to try and get short and potentially ride it down to either fair value or the low of the range. And it depends again on whether you're looking to buy the pound. If you're looking to buy the pound, you're getting short on this currency pair. If you're looking to buy the euro, right, you are looking at this first level, which we did kind of react to from last week. Again, we're coming down into this demand zone here again, right? But for me, this pair, it's a bit unpredictable, you know, around Brexit. A comment here, you know, a tweet there, you know, prices could, you know, either go in your favor or not. But from a technical perspective, it is very, very, I would say difficult. But as far as like confluence and, you know, clarity, it's not one of my favorite pairs to trade in until it really probably comes up to maybe somewhere like here in between, you know, this area here. I'm not really a fan of, but because confluence wise it is a bit, like I said, it's a bit messy. But here would be probably my preferred, and even, you know, actually, you know, around this 0.90 level. So at the moment I'm gonna steer clear of that. But if you do see any trading opportunities, you know, be my guest. The Euro Swiss, right, we did have a reaction off of this supply zone, but then the euro strengthened, breaking past that zone there, so we can kind of delete that. That's created now a demand zone, so we look to get long if we get a any kind of pullback. So demand, right, so if we do get a pullback into this level at some point this week, this would be where you're looking to try and get long. Trying to get short is your first area right there, right? And again, just as some confluence, if you're looking at where other traders are looking to buy and sell, this would be really the area that you're looking to try and get long, just from a horizontal support and resistance level, right? Also we got supporting this, right? So we got some I think that not within this supply zone, to be fair, but you've got one potentially, yeah, that one looks a bit better. Again, not within it, but you can see where you've had resistance, support. This pin bar would have definitely been used as some sort of support in real time if that's all you saw right there. Traders would have been trading that. Creates a supply zone just above it, so if we do get prices come up into this you know, this supply or this resistance level, and you've got a round number here as well, you could potentially also want to get short around here. So decent setup on the Euro Swiss short, long, decent setup as well, right? And again, just apply your diagonal and dynamic if it is applicable. Euro Aussie, now we have you know, prices really are not breaking past this level, but also caught between the supply and demand level from, you know, the previous week or two. So again, if prices do go deeper into this level, this is where you'd be looking to probably get first establish some long trades. And if they do come up into this fresher level of supply, this is where you'd be looking for some short trades. I think that's pretty much it for that. Is there anything else? Nope, nothing there. Aussie dollar. What do we have on here? So we kind of broken past this here. Now we do have not a technically it hasn't taken out this demand zone. Well, actually it's created a demand zone here, right? It did get some supply, but and even though yes, technically it is supply, it's not necessarily my favorite and the strongest level of supply, and just for some reasons that even though we sold off we didn't take out this level of demand. So but we did move a couple of, maybe about 130 pips to the downside from this sharp move. So it had this hard in, hard out movement. So I'll put it here, but just be wary that it's you know, if you're going to trade this, is not necessarily my preferred level of supply. But with the dollar strengthening, right, you'd probably go down onto maybe a lower time frame, and this is what it would look like, right? So if you've got enough pips to the downside, if you comes up anywhere around here, right, I don't trade this time frame, but you can see that there is, you know, some support here. So you could, you know, if you saw prices come up into here on an hourly time frame, and then look to potentially trade short, or maybe the higher level around here, as you've got some, you know, some resistance around here as well. All right, so decent wise on a lower time frame chart, right, especially if there's some dollar strength. But from the bigger picture, I'm probably, from a value range perspective, right, let's have a look. VR tool, yeah, we are into some fair value as well, right? If we were looking at that area there and that area there, so fair value, decent as it goes. Now that I'm looking at it and analyzing it, it's a decent level, but like I said, just according to my rules, it really didn't take out this demand zone. So I'll put it here anyway. If you're not too sure, just pretty much, you know, lower your risk. If you normally risk 1%, maybe risk 0.5%, or, you know, 0.25, and see where it takes you, right? To the downside, to the upside again. This would be where, you know, bargain level would be. This is where the cheap level is. So you'd be looking at anywhere below fair value as a buying opportunity, right? So this would be your first area here, second area down here from this longer in the past demand zone, right? And then we have the Aussie yen. Aussie yen, this is pretty much where, say, our value range is. So again, price is a great illustration of where we look to buy and sell, right? Price have been literally ranging in between here, but as we know, ranges a price agreement, right, between buyers and sellers, expensive area or cheap area, depending on which currency you're buying. But we know that with ranges, value ranges, price agreement, you know, prices don't really necessarily stay in there for too long, and you have price discovery, which is basically what trending markets are, right? So if risk is on, right, you know, we have moments of risk on in a risk off environment. Again, risk off environment being the trade wars between China and the US and pretty much the rest of the world, and tariffs. And again, the market starts to care, right, about, you know, putting their money into safe haven assets. Then you could be looking at a short here that could potentially break through here. If the market again doesn't care about, you know, the trade wars, doesn't take it as serious, so it doesn't care, but necessarily doesn't factor in it at the moment, then you could see prices come up here, obviously, you know, some profit taking, and then look to, you know, break to the upside. But right now, as a trade, and let me just delete a few things, right, as an actual trade, I think if you're looking to buy, this would be your first area to look to get long. So if you do get some sort of pullback, right, and you're looking to ride the, you know, the immediate trend, the trend being from this low to this high, right, say low to this high, but higher highs and higher lows, like that. And then you're looking for a pullback into this area somewhere before looking to establish a long trade. Short trades gonna be around here, but again, just be careful that we've touched this level once, twice, 3 times. But if you do see, you know, risk off coming to the market, you know, and safe haven assets start to pick up, like for example gold and things like that, then you may want to, you know, look to short around here. So that brings us to the conclusion of our weekly supply and demand technical analysis. If you like what you see and want to get these levels and updates, subscribe. Link is in the description box below. Yeah, hope you have a great trading week. Please don't forget to like, subscribe, share, comment. If you want to ask me anything, leave a comment in the description box below. Be greatly appreciated. I won't bite, you know, just leave a comment. And if it's a negative comment, at least make it be constructive and we can have dialogue back and forth if you don't understand certain things. But yeah, thumbs up, like, subscribe. Again, I will see you in the next video. Take care. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.